Welcome back. You're watching us here on Halftime Report, virtually at the low point of the trade for the indices, 17,650 for the Nifty Bank just a shade under 4150. Important to know, in today's trading session, it's not only the weakness of the Nifty Bank which is not doing well for us, it is no support coming in from the IT index which is not doing well for us either. As a result of which, while the Nifty has fallen below that 17,600 mark, 17,700 mark, closing in on that 17,650 mark, all those who had written the 17,800 put, hoping for 17,700 to come back as a support, have had to close their positions out. So if you just take a look at it, 23 lakh shares on the 17,800 put have been covered. And why is the 17,800 put? The 17,750 put as well has seen a fair amount of short covering. However, at the same time, that has given bears some fodder to go ahead and write the 17,700 call as well as the 17,800 call. So not only have the supports gone away, on the way up, we are facing a fair amount of resistance as well. The most notable one will be at the 20-day moving average itself, which was proving to be a resistance earlier, a support thereafter, and now again will be a bit of a resistance. Near-term support, however, is 17,600. That's where we're seeing a fair amount of writing. The 17,600 put comes up for you for a premium of around 42 odd rupees. Bulls would like to defend 17,500 to 17,600 on the Nifty itself. For that to happen, the key will be what happens to the Nifty Bank. Now the Nifty Bank has fallen below all its important moving averages. The 200-day moving average is below 40,000, but above that we have the psychological support, which is 40,000, and we have seen a fair amount of 40,000 puts being active out there as well. So if the Nifty bank holds on to 40,000, Bulls would like to defend 17,500 to 17,600 on the Nifty itself. We do have Aditya Agarwala with us to give us his view on what the charts are looking like right now. Aditya?
Morning, good afternoon. Sorry, good afternoon. Clearly, there is a bit of a selling pressure, Mangalam, as you pointed out, and on the downside, 17,600 is the immediate support zone, which also happens to be the trend line support. If I join the recent lows, I get a trend line support, which happens to be 17,600. So traders should closely monitor this support level of 17,600, and 17,800 on the upside will now act as a hurdle. The range has suddenly shifted in trade today from 17,800 to 18,000 to now 17,600 to 17,800. The problem area is definitely the banks where the selling pressure is intense, and 40,100 is somewhere one should closely monitor. If 40,100 breaks on the downside, then Mangalam, chances are high Bank Nifty could slide all the way down to sub 40,000 levels. So overall, I believe there is a bit of a volatility which will pick up after today's selling pressure, which is likely to continue maybe in the coming trading sessions as well.
Okay, Aditya, that point is taken on the financials. The PSU index itself has lost around 15% on a year-to-date basis. Any specific stocks?
Absolutely. Actually, the fact is, last year we had seen a massive outperformance in the PSU index and in the entire basket of PSU banks. Now it's a bit of a consolidation and a correction that we are seeing in the PSU baskets. I believe this will continue for some more time. The large cap names like SBI, Bank of Baroda will see further downside, at least 4 to 5% from here on, and maybe then it will provide a good opportunity to initiate fresh longs. I don't see a massive selling pressure in PSU baskets, but yes, a bit of a selling pressure will be there for at least a month or so. Having said that, there are pockets where there are opportunities. The first buy call recommendation on my list is Aurobindo Pharma stock. After a massive correction, has now started to form a base and now inching higher. So one can initiate a fresh long positions in Aurobindo Pharma. The pharma space has been a bit of a mixed bag, and I believe Aurobindo Pharma from that pack should outperform from here on. So on the upside, one can look for a target of 500 at least, with a stop loss at 460 on the downside. Cement stocks are correcting, and that is where I believe there's some more pressure which will come. So ACC is something which is looking weak on the charts. It's almost broken down from a trend line support. On the downside, it can test levels of 1700, so one can go ahead and short ACC for a target of 1700 on the downside with a stop loss at 1800 on the upside.
All right, Aditya, thank you so much for joining us. So those are some technical bets as far as market today is concerned. Slip into a short break now. On the other side, Rupesh Shah, who is the Executive Director Corporate Affairs at Symphony, will join us for an outlook on their business in the domestic and the export markets as well. Stay tuned for that.